Silver surged about $6.50 today. It blew through $100 an ounce. We ended up closing around $102.50. We're up 45% in silver. Now that's on top of the spectacular gain from last year. The Chinese are waking up and they're going to be buying gold through 5,000. Who knows what they're going to do with silver? Buy before then. As far as the gold stocks, yeah, you got to wait till Monday. Maybe $100 silver isn't something worth celebrating either, because the reason silver is going up and the reason gold is going up, this is a reflection of bad things that are going to happen. Metals are forward looking. First time I made a $5,000 gold forecast on CNBC, gold was about $1,700. And then a couple of years later, it's down to $1,200. And they're bringing me on and they're playing the clips of my $5,000 forecast. And they're saying, Peter, you were wrong. You see, you were so wrong. All the problems have got worse. We got way more debt now than we had back then. This is a much bigger bubble. We've printed way more money. 5,000 is nothing compared to where we're ultimately headed in the price of gold. Silver surged about $6.50 today, something like that. It blew through $100 an ounce. We ended up closing around $102.50. All-time record high. Silver's never been above 100. Of course, once it got to 100, it wasn't resistance. It just blew right through it. And now we're above 102. Gold also not too shabby, up about $45 or so, but it couldn't quite make it to 5,000. Gold went out at around 4,980 or so. In fact, I don't think it's actually finished trading yet, so we'll see. But 5,000 is probably not going to happen until Sunday night. In fact, I think gold is going to do to 5,000 what silver did to 100. And again, that may happen Sunday night, Monday. In fact, the percentage gains, listen to these numbers. Silver was up 6.6% today. On the week, it was up 15%. And so far this year, which, we're only maybe, I guess, 3/4 of the way through January. We got another week left. But so far this year, we're up 45% in silver. Now, that's on top of the spectacular gain from last year. Another 45% this year, and we still have a week to go to finish January.
The real story here isn't silver breaking $100. It's how effortlessly it did it, without the usual pause or pullback markets rely on. As Peter Schiff has pointed out, parabolic moves don't start at the top. They start when supply quietly disappears. And a 45% YTD move before January ends is a signal, not a climax. A 6.6% daily gain and a 15% weekly surge puts silver among the strongest performing assets globally, while gold, quietly pressing toward $5,000, confirms this is a coordinated metals breakout, not a one-off spike. Historically, when silver outruns gold early in a cycle, it reflects stress-driven demand and tightening liquidity, not speculative excess. For investors, this isn't about chasing price. It's about recognizing that traditional resistance levels fail when macro confidence erodes. What Peter Schiff hints at next reframes why $5,000 gold may only be a checkpoint, not a destination.
And people didn't believe me when I said I thought the metals could do even better in 2026 than they did in 2025. Well, we're already off to a much stronger start to this year than last year. Remember, most of the rise in silver happened towards the end of the year, and now the momentum has continued in the beginning. Gold up about 1% today. On the week, just under 9%. I think about 8.8%. This was the best week gold has had since, I think it was March of 2020. And that was a big rebound from a COVID sell-off. So gold had a great week because it got killed the week before. That's not what's happening now. Gold had this great week when it was already trading at record highs. Right? So it wasn't a distressed, bounce back. This was pure momentum breaking out to record highs. And I think that there was some resistance at 5,000. And that's going to give way, I believe, on Sunday night. Year to date, gold is now up better than 15%. I think just over 15.5%. Again, we're not finished with January yet. This could be a better year for gold than last year. Of course, the gold mining stocks, the silver mining stocks, all making new multi-year all-time record highs today.
What makes this move different is not the size. It's the timing and context. And Peter Schiff has warned this is exactly how momentum-driven reallocations begin. Gold's strongest week since March 2020 happened then on panic. This one happened at record highs with no crash to recover from, which flips the usual narrative entirely. A near 9% weekly gain, while already elevated, tells us institutional demand is chasing protection, not bargains, and miners hitting multi-year highs suggest earnings leverage is finally being priced in. Historically, when gold leads while equities remain calm, it signals quiet portfolio insurance, not retail speculation. For long-term investors, this reframes gold from late trade to early cycle hedge, especially ahead of Fed and election year volatility. What Peter Schiff emphasizes next is why miners may be the most misunderstood risk-reward setup right now.
Now investors are finally moving into this sector, but they still didn't gain nearly enough to make up for the lost ground. Given how much the metals have moved and how much higher gold company profits are going to be, the current stock prices don't even come close to reflecting that reality. So I think investors are still kind of shell-shocked. They don't really get what's going on, but they will. There's going to be a wave of money coming in to these stocks and to precious metals, physical precious metals, going forward for the rest of the year, next year, and especially, too, when we get the money coming out of Bitcoin, which, by the way, Bitcoin was down 6% this week, not digital gold, the anti-gold. And year to date, Bitcoin is positive, but just barely. It's up 1%. I expect that to change by next year. A lot of people, these hodlers, are holding and hoping, and they're expecting Bitcoin to catch up to gold and surpass gold. Not going to happen. In fact, the people who have been waiting are going to throw in the towel. The speculators in the ETFs are going to sell, and the bottom is going to drop out of this market. A lot of the people that are in the Bitcoin ETFs raised the money to make those investments by selling their gold stocks and their silver stocks. That was a huge mistake.
The uncomfortable truth here is that capital didn't choose Bitcoin over gold because it was safer. It chose it because it felt easier. And Peter Schiff has been blunt about that miscalculation. Bitcoin down 6% in a single week, while metals surge exposes a narrative gap. Wall Street won't admit. Correlation breaks when liquidity tightens. Mining stocks still lag metal prices despite margin expansion, meaning equity valuations haven't caught up to underlying cash flows, a classic late recognition setup. ETF-driven Bitcoin demand was largely funded by selling real assets, and that reversal risk matters when sentiment turns. For investors, this isn't an anti-crypto rant. It's a warning about what happens when speculative flows unwind faster than fundamentals can respond. What Peter Schiff points to next is why this rotation could accelerate, not slow, once volatility returns.
When Bitcoin hit 100,000 in December of last year, December of 2024, right after Trump won the election, and everybody was having a Bitcoin, 100,000 party. What they should have been doing, instead of celebrating at those parties, they should have been taking profits. They should have been selling their Bitcoin, which is now more than 10% below 100,000. And they should have been buying silver, like I said, because had they done that, they would have almost 4 times as much money today had they just made the switch from Bitcoin to silver. Now, it's not too late because it's going to get even worse for the Bitcoiners if they don't get out and get into silver or get into gold. And by the way, I didn't see any silver 100 parties raging today. But this is a much more significant milestone as far as I'm concerned. I mean, silver's a real deal. Bitcoin is just a speculative mania, in nothing. So yes, the fact that a speculative mania drove the price of nothing up to $100,000, yes, I mean, it's something to, to consider, and it was an impressive feat, but, it's nothing to celebrate. Now, of course, maybe $100 silver isn't something worth celebrating either, because the reason silver is going up and the reason gold is going up and the reason they're going to keep going up is not good news.
Markets usually ring bells at tops, and the $100,000 Bitcoin celebration was one of the loudest, something Peter Schiff has repeatedly flagged as a classic sentiment tell. A 10% drawdown since those parties, while silver quietly quadrupled relative performance, isn't luck. It's capital rotating from narrative to necessity. Silver doesn't throw parties because it doesn't need belief. It needs supply, and that's the part headlines ignore. The deeper warning here is that metals aren't rising because the world is healthy. They're rising because monetary trust is thinning. For everyday investors, this reframes metals as insurance, not speculation, and forces a harder question about what assets actually preserve purchasing power when confidence fades. What Peter Schiff underscores next explains why this rally may reflect economic stress, not prosperity.
This is a reflection of bad things that are going to happen, not just bad things that have already happened, but metals are forward-looking to bad things that are going to happen. Now, bad things are going to happen to people that own Bitcoin. They're going to lose all their money, but that's not what I'm talking about. I'm talking about much more significant bad things in the U.S. economy that are going to impact average Americans in a very profound way and in a very negative way. Now, gold might be the better buy here, right? Because you can still buy it below 5,000. And I assume that if you watch this video on Friday night or on Saturday morning, Saturday afternoon, you could still buy gold for under $5,000. If you wait until Monday, that may no longer be possible. We could be quite a bit higher. Than 5,000 even. I'd be 5,000 something. But, now you know why I have been, pounding the table, my desk here, so aggressively. It's not that I'm just trying to sell you gold and silver. Sure, I want you to buy gold and silver. But, I don't need you guys to buy gold and silver. I got plenty myself. I got plenty of gold stocks. The reason I've been so aggressive is because I knew this was going to happen. What is happening right now, the type of move that we're seeing in gold and silver, this does not surprise me. I've been waiting for this. I've been predicting this.
Gold breaking toward $5,000 isn't optimism. It's a market pricing stress before headlines admit it. As Peter Schiff frames it early, metals move ahead of economic damage, not after it, and gold up over 15% year-to-date signals forward-looking fear, not celebration. When investors rush before a psychological level, like $5,000, it reflects currency dilution expectations tied to deficits, refinancing risk, and election year spending. Historically, similar momentum appeared in 2007 to 2008, months before consumers felt real pain. For portfolios, this move is less about timing tops and more about protecting purchasing power as policy risks compound. What Peter Schiff highlights next explains why waiting for confirmation often costs investors the most.
What surprises me is that it took so long to start. I was doing some research, and I'm going to put these clips up probably next week. These are interviews that I did on CNBC back when they still had me on, when I was forecasting $5,000 gold, and they were giving me a lot of shit, right? Because like the first time I made a $5,000 gold forecast on CNBC, gold was about 1,700. And then a couple of years later, it's down to 1,200. And they're bringing me on, and they're playing the clips of my $5,000 forecast. And they're saying, Peter, you were wrong. You see, you were so wrong. How could you be so wrong? And then people were saying, I shouldn't be recommending gold. And this is at 1,200 now because it's gone down. You're losing people money. People could be in the stock market, but they're listening to you and they're buying gold, and you should be ashamed of yourself. And you're just trying to sell gold, and you're screwing people over because you're talking them out of the stock market and you're getting them to buy gold. And I'm like, yeah. And they should buy more now at 1,200. And if you look, and I'm going to put this video up next week, but you can see the price of the S&P and you can see the $1,200 price of gold. Well, since that show, gold has outperformed the S&P. So people who did exactly what I was suggesting made more money.
Wall Street ridicule often peaks right before long-term trades start working. As Peter Schiff recalls, calling for $5,000 gold when prices fell from $1,700 to $1,200 invited mockery, yet data since then tells a different story. From those CNBC segments to today, gold has outperformed the S&P 500 on a total return basis, especially when adjusted for inflation and drawdowns. Media criticism focused on short-term price pain while ignoring cycle duration and monetary expansion after 2012. For investors, this shows how institutional narratives punish patience while quietly rewarding it later. What Peter Schiff underscores next reveals why time, not headlines, decides who was right.
Yes, the stock market went up, right? And I agreed that it was going to go up. I just said that gold and silver would go up more, where I was talking specifically about gold, not silver. But I said gold would go up more than the stock market, and they laughed at me. They made fun of me. They said I should be ashamed of myself, for trying to con the public into buying gold. Well, they're better off. Right? The people who are worse off are the ones who bought the S&P. Now, of course, yes, buying the S&P was better than just sitting in cash. And I acknowledged during these interviews that the Dow would go up, the S&P would go up. I wasn't telling people to short it. I just said that in real terms, priced in gold, it was going to go down. So why not just own gold? Which worked out. But, they just made fun of me. They had no idea because I knew this was going to happen. And the reasons that I gave for why I believe gold was going to go to 5,000. That's exactly why it's going there. But that's also exactly why it's going much higher. But, because over these last 12 years, and I back then I didn't expect it to take 12 years. And I thought it would have happened sooner. But because it's taken so long, all the problems have got worse. We got way more debt now than we had back then. This is a much bigger bubble. We've printed way more money. And so 5,000 is nothing compared to where we're ultimately headed in the price of gold.
Nominal gains can hide real losses, and that distinction is where most investors get misled. As Peter Schiff stresses early here, the S&P rising doesn't mean wealth increased if purchasing power fell relative to gold. Over the last 12 years, US debt has more than doubled, and the Fed's balance sheet exploded past $9 trillion at its peak, reshaping what real returns mean. Measured in gold, equities quietly lost ground despite headline highs. For portfolios, this reframes diversification as survival math, not ideology. What Peter Schiff explains next clarifies why long delays often magnify, not negate, structural outcomes.
But the point is that, these guys were all over me for making a prediction that turned out to be accurate. Yes, it took longer than I expected, but even though it did, if you bought gold back then and waited it out, you're still better off than the S&P 500. As I've been saying, and get yourself some gold before it's above 5,000. Silver, look, yeah, it may go back below. It's hard to say it'll never go below 100 again. It's only 102.5. But again, I was saying the same thing at 80, 70, 60. I didn't have that much time to say it at 60 or 70 because it didn't stay there that long. I was talking about it at 30 and 40. You had plenty of time to buy $30 silver and $40 silver. In fact, you had years to buy $20 to $30 silver. Right? I was trying to get people to buy it because I knew this was going to happen. I just didn't know when. And it is not over. It's just getting started. And if you really want to make serious money and you're willing to take extra risk, look at these gold mining stocks. Look at these silver mining stocks. They are still incredible bargains despite doubling and tripling or quadrupling because they started from ridiculously low levels and they haven't gained nearly as much as their earnings. So the stocks are cheaper on a PE basis. But not only that, their future earnings are going to grow even more because gold and silver prices are not going to stop going up. They're going to keep rising. And none of this is in these stocks. So
long cycles reward conviction. Not perfect timing, and silver's climb exposes how slowly capital reacts. As Peter Schiff points out early, buyers had years at $20 to $30 silver, while today's 100+ price only looks sudden in hindsight. Mining stocks lag metals despite earnings leverage, leaving PE ratios compressed even after double or triple-digit gains. Historically, miners outperform late in metal cycles as margins expand faster than spot prices. For investors willing to tolerate volatility, this gap matters more than day-to-day price swings. What Peter Schiff highlights next shows why valuation, not excitement, drives the next leg.
the Chinese are waking up and they're going to be buying gold, I think, through 5,000. Who knows what they're going to do with silver. So don't wait for Sunday night. Buy before then. And as far as the gold stocks, yeah, you got to wait till Monday to buy the gold stocks. You got to wait till Monday to buy my gold fund. In fact, you can't even buy it until the close. But don't wait anymore. Just do the right thing and do it while you can. Anyway, thanks, everybody. And remember, share this video with your friends. Make sure your friends buy some gold and silver. Make sure your friends get out of U.S. dollars. Make sure your relatives get out. Make sure as many people as you can. You got to help. I'm trying to save you. Now you got to help save your friends and your relatives, right? Because once the dollar crashes, you know, you can't unscramble that egg, right? You know, once it's lost all its value, it ain't coming back, right? And the government's not going to be able to bail anybody out of this crisis, right? Because when it's the dollar that's crashing, the government is powerless. The Fed is powerless. Because if they just print a bunch of money and give it to you, what's it worth, right? So you've got to bail yourself out, but you got to do it in advance. Because if you wait until after the fact, well, you got nothing left.